thanks a lot, Matt, for the introduction. And yeah, I guess it doesn't really matter if you call it service for equity or equity for services. Some also call it sweat equity. So there are many different names for it. So I'll try to explain to you in the next 5 minutes what we're doing and also what the possibilities are for investors specifically, as I guess that's what you're also interested in. So service for equity, first of all, it must be done right. It's not a very trivial thing. And we saw that often those deals are set up not in an ideal way because the startup and the service provider are neither investors nor lawyers. So often those contracts are not done very well. What we have learned, though, that there's so many service agencies. So when I talk about service providers, I mainly mean like IT agencies for web development, UI, UX, or marketing agencies. They want to help startups, but they don't know how. So we want to change this and bring them together basically on our Venture Studio platform, where we enable them to work with those startups. The thing is, they can't really do it alone because they focus on those certain niches that they are providing, but together in the network, we can provide many different services that the startups need. And we can see from some examples that venture studios are really successful. You might have heard of the Dollar Shave Club, that was built with Science Inc. and sold to Unilever for $1 billion. Or also Snowflake is actually from the venture studio. So what do we offer? First of all, we are offering a marketplace where we have vetted service providers. So those are all selected partners, basically, that really help the startups. And we support with the matchmaking and really make sure that the startups find the right business partner there. And we also set up the contracts so that service providers in particular can also use them in their private network, basically, and don't have to worry about all the legal hassle. So this enables them to onboard new clients a lot faster, especially if the startups come through our platform, they already have the education about the service for equity. And also the service providers can manage all their startups in one place. They can track the service values, create transparency that way, and establish trust, which we believe is especially important if you're working in such a collaboration, which is really like a long-term relationship at the end. So who's behind Capsley? We have experienced advisors, for example, Jan Filcher, who's co-founder of SICTIC and very active in the startup space. Max, our legal counsel and MBA colleague of mine, who has a law firm here in Zurich, and Basil, who has been many years in the US and also ran a startup there in the Silicon Valley area, who's our tech advisor. What's
hey, Vincent, just so you know, I don't think your pitch deck is updating. I'm still on your home slide of the pitch deck. I don't know if everyone else is.
I'm sorry about this. Then I'll go out of presentation mode. Is it changing now?
You're good now.
Okay, so I showed those screenshots about the marketplace, the contract setup, where you can manage the startups in one place. And this is the team, Max, Jan, Basil, and myself. And now I'm here in the business model. So basically there are two parts. We have a subscription fee for service providers. So they get access to the marketplace, they get access to the contract platform, and they can manage all the startups on their portfolio on the platform. And especially for the marketplace, where we connect the startups to service providers, we charge a commission fee of 10%, and that is on the whole service value. So if they pay in cash, we also earn cash. If they pay, for example, with virtual company shares, which is what we recommend if they want to compensate them with sort of equity, and then we get 10% of that value as well. And this is also how we are building a startup portfolio over time. We are already live. We're already helping startups. We had the proof of concept in June last year. We have a service volume of around 200,000 at the moment. This is actually a picture from the proof of concept last year. So our go-to-market is really to go through events as well. Partnerships with accelerators are very important for us, but also establishing thought leadership through blogs, webinars, and those kind of things, so that really service providers and startups come to us for this model. Our vision is really to help thousands of startups with the scalable platform. And we're starting right now with the marketplace and the service for equity community. The next step is the asset management platform, where startups can compensate all their supporters like advisors as well and employees. and where service providers can manage their portfolio basically. And we want to generate insights from this platform, like how the startups are compensating their supporters and how this is growing over time to generate insights and see how the startups are performing, to then invest in the top performers, which is the final goal, to also create an investment fund. So you can see that investors are very, very welcome to join us. What we provide is sort of like an operational VC, because you get access to this great support network for startups in all the different areas. You can get access to the deal flow and the insights that we will generate about the startups, and also get a financial return even. So if you are interested in this, obviously I'm happy to discuss afterwards. Okay, so this is it. Thanks a lot for your attention, and I'm looking forward to your questions.
Awesome. Thanks for presenting, Vincent. The super interesting model. You're kind of flipping the venture studio on its head, so to speak, and letting others build the studio, and then you have the venture. I like the model overall. What challenges do you see in terms of selection bias? So I know with certain models, generally the startups that can't raise funding are oftentimes the startups that don't deserve funding. How do you handle that approach with Capsley and with your screening process?
Yeah, that's a good question. I mean, at the end, there's a screening process from us at first, but we have relatively loose rules, right? Because at the end, it's also the service providers who decide who they want to work with. So, we also have this, I guess, similar to even maybe you could say SICTIC business angel platforms. You have a bunch of investors there, but it doesn't mean that they're funding every startup, right? So it's the same with service providers. Just because they're on our platform and they're in general open to invest in startups doesn't mean that they take on every startup. So there's sort of the selection from our side, and we try to make sure that that the founders are able to validate their business model, to set up the hypotheses, to really test this, and then come to us when they need additional support, when they want to execute things a lot faster, right? And it doesn't necessarily mean that they need to have co-founders. So this is maybe where we are different to traditional investors, because we believe you can, in certain most ICT businesses, you can probably replace a CTO and have much faster MVP development with an agency, set up a website a lot faster, even if you have a CMO who doesn't have experience with websites, probably, because you can't cover all of this. So this is where I believe there's really an advantage of working with agencies, and where they can have impact on the startups and make them successful faster, basically.
Understood. What other questions do we have? We have to say goodbye, unfortunately, to Antonia. She has another commitment that she needs to jump off to. But Claudius and Thomas, what questions do you have for Vincent and what he's doing with Capsley?
Maybe a quick question. So you have this matrix on your website with all these different services, right? Mm-hmm. Which are the ones that are most demanded right now, or like for your market research? Which one you think will be the most demanded ones?
It's right now it's mainly marketing, like digital marketing services, and also IT development. Mm-hmm. This is also what we focus on. So we focused on digital services, basically, where we also believe they are bigger size projects and where the service providers can really have an impact.
Okay.
And how do you make sure the startups don't get taken advantage of by service providers? That's the other flip side of the question that I would have.
Right. This is also very important. That's something we've also seen in the beginning with those service equity deals, that I think one of the main mistake, and but what everyone is doing naturally, they want to figure out how much equity do I get, for giving you those services, and then you start negotiating about percentages, and you quickly come to like 5 or 10% or whatever, but you don't even know yet what services do they need to provide. Is it going to be a long-term relationship, and so on. So this is why we try to improve this through our process and through the contracts. So basically, you always start with a service agreement that defines what is the project scope and what's the market value of those services. And then you can agree on how much of that value can be invested. And then you have a clear investment number, right? And then it's not invested at this moment. So when you start, but after 6 months. So you know what a convertible loan is. So it functions kind of like this, right? So we would also put a valuation cap or a discount in the service agreement so that later on this investment value can really be converted at like normal terms, basically.
Understood. And any type of service vesting, so to speak, in terms of the service providers needing to stay on for a certain amount of time. The only thing worse than getting something built is getting something built and then not being able to do anything with it, become just left.
Sorry, I'm not sure if I got the question. You mean if the service that are provided are bad?
If there's any longer term service associated with that. So for instance, I want to get an app built and I find out later there's bugs because I don't find out initially, or I need updates, etc., and changes made. And the perfect team that coded everything is now AWOL.
Sorry, it keeps cutting out, at least for me, but okay, if you need like further development after the initial project, I think, so yeah, we usually define milestones, and at first you maybe define a smaller project, and maybe the investment amounts differ over time as well. Maybe at first you want the startup to pay a little bit more cash, maybe then you have quite a high investment, and over time the startups pay you normally, right? Because they generate revenues or have fundraising then. And yeah, I mean, you can also decide to quit the collaboration and get those app developers in-house over time. So this is the IP is also regulated in our service agreement. So to make sure that always the startups have the IP and not the service providers.
Thomas and Claudius?
Vincent, thank you very much for the presentation. We've known each other for a while. Just one question actually that came up here. You mentioned portfolio returns for investors. Mm-hmm. How does that work? So is that investors who invest into Capsley, or are you running a fund on the side, or can you elaborate a bit on that?
Yeah, it's a good question. So what I mean with this is basically the portfolio that you could say we are sharing the commission fee with you or with certain investors who become a member of the Capsley platform. So we take the 10% commission fee on each deal, right? And so that's how we built up the Capsley startup portfolio, where we know without investing money, that's just our business model. And the returns on this is what we will share with certain members, basically, of the community. So that's just a financial return, basically, on a membership model. But what you get with the membership model are also obviously access to all the platform, to the deal flow and those things. But on top, you get a financial return.
Okay. Claudius, any questions from your side? Because I have another one.
There you go. All good.
So one thing that you didn't mention, I believe we discussed this in another setting. How is the acceptance among investors of these startups? So startup applies for your platform, obtains a service in exchange for equity. Then you have the service provider or Capsley on the cap table. How does that affect the fundraising efforts of that startup?
Yeah. So first of all, they're not directly on the cap table. I mean, with virtual shares or phantom stocks, I mean, they lose the service providers, but it makes the admin a lot easier, right? Also setting it up, the contract and so on, but also later on because they're not on the cap table. So that's already a good thing. And then I feel like right now, still that there are like these two camps of investors. Some don't like it so much, and some absolutely have no problem with this and are happy that there's like a support network for startups. We even got contacted by some business angels who were like, we need to support our startups. But so it's hard to say. And it's also small and big investors. I mean, you see those those venture studios, like, okay, Rocket Internet is a bit extreme example, but they take huge amounts of the startups, right? I think those startups didn't have problems with fundraising.
But they build the whole business. It's different versus someone just being a service provider. That would be one pushback I would have is the venture studios, the Rocket Internets, they are the team and then they spin the team out.
Exactly. So yes, it depends. That's the typical venture studio approach, right? That you would build this in-house and this venture studio would have a large chunk and the founders, they would basically hire the founders and they just have a smaller share. Yeah. But
so you always do virtual shares. Did I get that right?
Pardon? Can you repeat, please?
You always do virtual shares. Did I get that right? Or phantom stock?
Yeah.
Okay. Thanks.
That's what we recommend So that's also where we help the startup to set up a piece of ESOP, if necessary.